Good afternoon and a warm welcome to everyone joining us today. Let me provide an overview of the financial performance for the fourth quarter and year ended 31st December 2020. Revenue from operations adjusted for excise GST grew by 9.1% year-on-year in quarter 4 2020 to the level of 13,308.9 million rupees. With faster than expected recovery witnessed across our territories, we managed to close the pandemic hit year with a decline of 9.5% in revenue from operations to the level of 64,501.4 million rupees in CY 2020. Total organic sales volumes were up 5.7% on year-on-year at 87.1 million cases in Q4 2020. For calendar year 2020, total sales volume declined by 13.7% year-on-year to 425.3 million cases. This is for the year. And organic sales volume declined by 20.8% primarily because of a significant decline in volume in Q2 2020 due to lockdown restrictions. Realization per case has improved by 4.8% approximately in 2020, essentially on account of favorable mix and improvement in realization in the international markets. CSD constituted 72.6%, juice constituted 6.3%, and packaged drinking water constituted 21.1% of the total sales volume mix in calendar year 2020. On the profitability front, we were able to sustain certain cost optimization measures implemented during the pandemic that enabled us to report improved profitability in Q3 and Q4. Gross margins improved by 472 basis points during the Q4 2020 and by 231 basis points in calendar year 2020, led by favorable PET chip prices, which saw approximately 12.5% decline and a higher mix of CSD in total revenues. EBITDA increased by 48.8% to 1,722.3 million in Q4 2020. EBITDA margins improved by 346 basis points in quarter 4 2020. For calendar year 2020, EBITDA decreased by 17% to 12,018.7 million rupees from the level of 14,476.5 million for the whole year as against calendar year 2019. Depreciation increased by 1.6% during the quarter, decreased by 1.6% during the quarter. However, it increased by 8.2% in the calendar year 2020 as the effect of acquisition of South and West India sub-territories was with effect from 1st May 2019 in the base year. Finance cost declined by 21.6% during the quarter of quarter 4 2020 and by 9.2% in calendar year 2020 due to repayment of debt partially as well as lower average cost of borrowing. Our losses reduced significantly to the level of 72.4 million in quarter 4 2020 from the level of 539.5 million in Q4 2019, backed by sustained cost control initiatives and strong performance in international territories. I would also like to highlight here that in Q1 2020 we had an exceptional item component of rupees 665.3 million representing provision of impairment in the value of certain plant and equipment, glass bottles and plastic shells, etc. In addition, during Q1 2020 the company had revisited the outstanding deferred tax balances and taken back an amount of rupees 731.85 million through the statement of profit and loss. So on the whole, for 2020, PAT stood at a level of 3,572.7 million rupees. On the balance sheet front, net debt stood at the level of 30,158 million as on 31st December 2020, as against 32,461 million as on 31st December 2019. Our debt to equity ratio stood at a healthy level of 0.84x and the debt to EBITDA ratio stood at 2.51x as on 31st December 2020. I would like to add here that CRISIL has reaffirmed the credit rating for our long-term debt as CRISIL AA, and for short-term debt as CRISIL A1+. Working capital days increased marginally to form approx 26 to 31 days as on 31st December due to lower sales volumes, which affected the denominator in this case. On the Capex front, our net Capex included rupees 3,200 million approximately towards brownfield expansion at certain plants in India, Zimbabwe, and acquisition of assets for value-added dairy beverages in Zambia, and plus approximately 2,000 million for expansion primarily at Bharuch, Sri City, and Trun Valley plants from investment fund received from PepsiCo in calendar year 2019. This 200 crores which was funded last year, and 40 crores or 400 million towards capitalization of implementation of Ind AS 116 accounting standard for leases. Overall, even in the challenging year, we have reported a resilient and steady performance. Our operational and financial profile remains solid and stable, and our focus remains on generating strong free cash flows over the coming years. On the whole, we look forward to delivering a sustainable operational and financial performance going ahead. On that note, I come to an end of the opening remarks and would like to now ask the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hi, good evening, everyone.
Good evening. Good evening.
Hi.
Good evening.
A few questions. So first is, volume trajectory. So let's say CSD, if I read out just the previous 3 quarters number, -40 to +3 to +6, whereas juice -50 to -14 to -20, and water is -77 to -23 to +12. I mean, can you just elaborate on why there is such a big, a difference, in the growth rate for the 3 segments, and why juices is, has continued to, in fact, has on a YOY basis declined more? Can you just talk about this, across the portfolio?
For overall.
First, for water, for example, water mainly is consumed on the go. I mean, very few Indian customers or families actually consume mineral water at home. So when the second quarter, April to June, when the complete lockdown was there was no on the go. So that is what made water decline drastically. And slowly, as the market started opening up, water started recovering, and in the October to December quarter, water had completely recovered, except from large hotels and some restaurants. Otherwise, water had practically fully recovered. So that's the reason of the numbers in change in water. And just one.
Second one. 44, 50, 16, and -21.
Yeah. So juice, fundamentally, again, the main reason was a lot of juice is being consumed on the go, which again, the April quarter was very bad. There was no on the go. And then we recovered a reasonable portion of it in the third quarter, which we came down to 16%. But unfortunately, in the last quarter, we could not cover up completely, but it has recovered and we are doing well this quarter. So hopefully now we will not see any negative in juice.
Sure. And CSD +3 to +6 in the context of, let's say, how water has done on the go comment that you had.
Because what happened is, when the market was completely shut, in-home consumption increased, and people were consuming only CSD, not water. So water sales went down and CSD sales went up. So mainly, and large packs went up and small packs on the go reduced. So that is what made the big change. So in 8 ounce, CSD went up quite a bit, and that is why we could sustain it. But all the parameters in the last quarter, they are all back to pretty close to normal, and juices are coming back to normal now.
Sure.
So the farmers' protests in North India affected a bit, actually, the movement of goods in North India.
So if you see that on the go reduced from 60 to 44% in 2020, from 19 it was 60%. And in-home consumption was 40% in 19, which went up to 56%. And that was mainly for CSD.
Sure, that is very helpful. The other thing was on the gross margins, although Mr. Gandhi did mention about the packaging cost, but is mix also playing an important role because your gross margins are or actually comfortably above, its highest in 8 quarters, for example?
No, the mix is playing a part because glass volumes have reduced quite a bit, and all the growth is coming out of PET. Because of the pandemic, people are not feeling comfortable drinking glass bottles which has been had by somebody because they are recycled. Whereas PET and other is one-way packaging, so they felt more comfortable. Less people are touching it. There's no mouth which has been touched that bottle, so it makes a difference, and people are very much more comfortable having PET than glass. So glass volumes decline.
Sure.
In the last quarter, also the mix of water is higher, and where there is no concentrate and there is no sugar, but other expenses of freight, discount, and other things stay the same. So ultimately, profitability at EBITDA level, although is same, but at gross margin level, it plays a role.
Got it. Sure. And the last question, just curious about this introduction under new this one Mountain Dew lemon. So is this? You have already have a product Nimbu Masala Soda. So is it kind of competing under the 7-Up umbrella, or is it like pitted against the Limca? Can you just talk about it?
It is a Mountain Dew variant. We have added a product under the lemon and lime category, which is the largest category in India, and close to 600 million cases of lemon and lime category is there in India. And this is basically, if you look at to compete against our products, which is Limca and Sprite. So we have come out with this new product, and it is liked by everybody. Although we have recently launched it, and it has got lemon juice in it instead of just carbonated, and we feel this should become an important category. Similarly, like we had launched our energy drink a couple of years back, and if you look at it, we had even with the lockdowns and everything, we had close to a 250% growth on it from 19 to 20 in our energy drink, which is Sting, and we believe it will grow again at the same level this year.
Sure. And a small follow-up, Mr. Jaipuria. So why, you have Nimbu Masala Soda under 7-Up. So is it just about, strengthening the brand Mountain Dew? Is that the reason why you have done it?
No, but Nimbu Masala Soda is a different product. It has got masala in it. There is no masala in this. So it's a different product altogether. And obviously each brand name has its own salience.
I see. Okay. Thank you very much and wish you all the best.
When you put the name Nimbu, it's basically looked at only a summer drink, so that's a different category altogether.
Got it. Thank you very much and wish you all the best.
Thank you.
Thank you, Vivek.
Thank you. The next question is from the line of Chirag Shah from CLSA. Please go ahead.
Yeah, thank you for taking my question. I think Mr. Jaipuri answered my question on the energy drink part. But just a quick one on the Capex. I just wanted to ask, do you think that Capex for FY20 was a bit higher than what we initially estimated? I think it ended at about 560 crores, if I remember, if I'm reading the number right from the cash flows. And there was some value-added dairy beverage acquisition in Zambia, which is included in Capex. If you can just elaborate on that, and then the Capex going ahead into the next couple of years.
No, you see, part of it we had received money from PepsiCo in 19. So about 200 crores which was committed to Pepsi was spent this year, and that is why it is showing a higher Capex. And another 40 crores was
Ind AS accounting
it was an accounting adjustment. So if you take out these two categories, it comes down to 320 crores.
46 crores.
So actually it is not higher than what we had planned. So that is where basically the main reason.
Sure. And then the Capex, if Capex going forward, because if I'm right, minus the juices, we don't really have too much of Capex going forward. Is that still true? And what will be the Capex number?
It is still true, except, if the growth happens in certain territories which is higher than what the plant capacity of that territory is, then you have to go into brownfield plants. So you have to add one line or, just add some production capabilities in that area. And the only one additional plant we will be getting greenfield would be basically in Bihar, which was a territory which we had taken. But it's not going to be this year. It is going to be for next year.
Got it. Okay, sure. Thank you. And just on the dairy side, what is the plan going forward now that things seem to be settling? What is the plan to roll out the dairy drink?
Well, dairy is doing well for us, but what has happened is because of pandemic last year, we slowed it down, and now it is back on track and the products are liked, and it will be still a very small part of our business, and we want to see it properly put in the market and see the results from the market before we will go for an expansion in the next territory.
So fair to assume that CY21 will not see large investment happening on the dairy side?
CY21, yes, won't be a large investment in dairy side. You're right.
Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Percy Pantaki from IIFL. Please go ahead.
Hi, sir. My first question is on the recovery in sales, the trajectory. So, if I look at your India business, you had done minus 2% sales growth in the September quarter, and now we are at 0%. So there isn't much of a recovery here, and we've seen across all other FMCG segments and even consumer discretionary also, that the recovery in December quarter has been much sharper than September quarter. So what is the reason for this in your view?
I think the numbers are not correct, because quarter 3 we were minus close to 7%. And in quarter 4 we are positive by 1.2%. So there is close to...
Okay, so you're talking about the volume, I was talking about the value, that is the difference.
Volume I'm talking, because in quarter 4 the water sales picked up.
Right.
So the value comes down. Yeah.
Okay.
That's our smallest quarter, so also it's its effect can't be very big.
Fair enough. So second question is on the Capex going ahead. So for juices, we had put a Capex of about 550 crores in Pathankot, and typically we have held in the past that at seasonally adjusted peak capacity, we are able to do sales turnover of about 2 times, which would mean that the Pathankot plant should support about 1,000 crore plus kind of turnover in juices. We are nowhere close to that. We are actually less than half of that right now. So why are we even thinking about or talking about putting up a second plant now in juices?
No, where have we said we are putting up? First of all, 500 and odd crores was for dairy, juices, and soft drinks. It was not only for juices.
Okay.
So we are producing all the three categories there, and our turnover this year will be very close to what you are talking for the investment, and maybe even exceed that.
Okay. I stand corrected in that case.
Yeah.
And lastly, on international business, very good performance. Could you give some color on the geography-wise performance and also the story behind the numbers? What has led to this robust sales growth?
See, in Nepal, in quarter 4, we have grown at 25%. In Sri Lanka, we have not grown. We have gone negative because of the lockdowns. So each country is not really giving the right picture, because it depends on which country opened up, which country did not open up. Morocco, we are at par because lockdowns were still very stringent. Zimbabwe, we have done extremely well. We have grown at 40% practically. And Zambia, we have grown at 17%. So the lockdowns were much milder or very little in Zimbabwe and Zambia, whereas Morocco was much more stringent because it was close to Europe, and the position was very bad in Europe.
Okay. And sir, all these are volume growth numbers, right?
I'm giving you volume numbers, yes.
Okay. That's all from me, sir. Thanks and all the best.
Thank you. The next question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yeah, hi. Sir, thanks for the opportunity and congrats on a good margin performance. Sir, PepsiCo indicated market share gains in beverages segment in India in their earnings call. And there has been a healthy visi-cooler addition for us in Q4, as well as we did take some pricing actions as well. So how should we read this on market share gains in the upcoming season for you guys?
Well, I hope we can gain market share. I wish I could tell you ahead of time, but it all depends on how Coke performs and how we are trying our best, of course, to gain market share. But let us see. But the season has started off, the year has started off well, and we see healthy growth coming this year.
Right, but PepsiCo in their last call indicated that they have gained market share, sir.
That is right. Last year we have gained market share.
Okay. And second question from my end, since we are maintaining the Capex guidance of less than 50% depreciation, and if we are on an improving trajectory, then according to my estimates, we should be generating a healthy amount of cash in the upcoming year. So
right.
Any sense on the amount of debt reduction we can see in CY22 since we are going low on the Capex side?
Very right. For this year, there will be, the excess cash will be used for reduction of debt only. That's correct understanding.
And we will be maintaining a similar amount of dividend payout?
That we will be putting up at the appropriate time before the board to decide on that. But our policy on the dividend is very clear, and we have been adopting that consistently for last 4 years.
Okay. And on this new product introduction, since this is a juice-based product, so will it be falling under the lower GST slab? Is this the right way to think about it?
Yes, it will be.
Okay. And last bookkeeping question. So tax rate was low for us in the last calendar year. So what should be the level of tax rate we can assume for CY22?
CY21 actually, because we follow the calendar year.
Yeah.
Secondly, it should be around 24%. In the current year, there had been profitability in overseas, which was substantially good, at least in the quarter, and where we had carry forward losses. and in some countries there is no MAT concept, so it was lower. But going forward, 24% tax blended is a good assumption.
Okay. And one last from my side, can you provide the annual volumes from each of the international territories?
For 2020?
Yeah.
So Nepal was close to 16 million.
Right.
Sri Lanka was about 10.5 million.
Right.
Morocco was about 18 million.
Okay.
Zimbabwe was 34 million.
Okay.
And Zambia was 9 million, 9.2 million.
Sure. Thanks. That's it from my side.
Thank you. The next question is from the line of Yogesh Patil from Reliance Securities. Please go ahead.
Thanks for taking my question. Am I audible, sir?
Yes.
Yes.
Thanks. So, sir, what was your realization in this quarter compared with the last year, same period? This is my first question.
Okay. It was 3.2% higher than the last year's same quarter. From 148, it is 152.7 per case.
Oh, okay, thanks. And the second question is related to PET chip prices. As we know, the crude prices touched to the $53 per barrel. Do you see increasing product prices, and how much impact do you see in the first quarter or the CY21 at EBITDA margin level? Any rough estimate?
I don't think we will see much changes because we are reasonably covered for the major portion of our year. So we have covered ourselves. So I don't see a major issue for us, although PET prices have gone up drastically. But it won't affect us.
Okay, thanks. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Shantanu Basu from Smiths Limited. Please go ahead.
Yes, hi. Thanks for the opportunity. I would like to know your other operating revenue for CY20. So that's my first question. And the second question is, what plans do you have for further international expansion, inorganic opportunities in CY21 or beyond? So if you can
we are always looking for expansion, but depends if we get anything. Last year was a year which has been washed off, so we are not in a rush. We want to reduce our debt this year, and also if we get a good opportunity and Pepsi offers something to us, we are definitely always open to it. It all depends on the pricing and the territory.
Okay.
There's very little to acquire in India now, so it has to be outside whatever we get an opportunity.
Right. Any focus territories, any countries that you would like to
right
mention?
now, we are still looking at it because, last year we were more keen to make sure that everything went well at home. And because of the pandemic year, we were not on the prowl. So I think this year we'll start looking at it once our debt is reduced.
So would it be fair to assume that it would be in Africa or in Southeast Asia?
Well, those are the only two territories possible. It will be either Southeast Asia or Africa. We are not going to acquire Europe or US, so that's
okay.
what it looks like in case it comes.
Okay, thank you. And the other operating revenue figure for CY20?
It's 89.6 crores. This is, there are few plants where we get the grant, which before the GST era, which was there. So this is a figure which will keep on happening. Plus at the consolidated level, small, revenues booked under this head. It's a combination of all those things.
So it's 89.6 crores.
89.6 crores. That's right.
Okay. Thank you very much.
Thank you.
Thank you.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah. Hello. Thanks for the opportunity. So, sir, just wanted to know about two things. One, what is our current market share at the end of December? So, definitely it would have got impacted during COVID. But now, considering the situation is more or less stable, so what is the market share position at December 20 versus December 19? And secondly, again about the performance of the 1.25 liter product, which we had seen good success. So, overall, how is that product performance in the quarter? Yeah, thanks.
Well, I think COVID affected both of us, our competition as well as us. So COVID had very little to play with it because market share-wise, it affected both the companies. And as your predecessor, some of the people have said that Pepsi has said that we have gained market share in 2020. So our market share is higher than what it was in 2019. And we have done well as far as market share is concerned in 2020.
So, sir, means if is it possible to quantify what will be the gain or like that?
No, that's very difficult because the figures, the last quarter figures are still not out, so it's very difficult to say.
And moreover, the basis of this is PepsiCo chairman's statement in their quarterly result presentation, and their quarter doesn't coincide with our quarter. So that's also will never make it comparable. Secondly, we do not have 100%, we have 85% of India. And thirdly, within India, this keeps on, somewhere gain or loss. Net, yes, we are on the positive side. And like told in the last call, the overall blended share between Pepsi and Cokes with Limca and acquired brands, 1/3 for Pepsi and 2/3 for them on all India basis, including the territories of South and West, which were under-penetrated, acquired last year, or 5 sub-territories acquired in the eastern India, for which Chhattisgarh, etc. So it's 1/3, 2/3, broadly we can take it.
Okay, sure, sir.
Thank you. The next question is from the line of Pawas Petia from Inam Asset Management. Please
Hi,
go ahead.
thanks for the opportunity. Can you give some color on the month-wise recovery in 4Q? How has been the October, and November and December? And how has been the months of January and February so far?
See, October we had a slight growth. November we were minus little bit, but December our growth was close to 34%.
And the months of January and February so far, how has that been?
January, I think we are recovering back to normal what it was used to be. I can't give you the exact numbers, but the year has started well for us.
Okay, and in terms of numbers of Southwest, which we acquired, and the rest of the geographies, if I had to split the growth, how that has been?
It is about the same. It's not a major gap between the new territories and the old territories. I don't have the exact numbers, but it is about the same.
Okay, thanks. That's all from my side.
About 1% up or down, but nothing much.
Thank you. The next question is from Pritesh Chedda from Lucky Investment Managers.
Yes, sir. Thank you for the opportunity. I wanted to understand the cost optimization that we have done, let's say, in the year gone by. How much of the EBITDA per case should benefit versus, let's say, your historical averages that we see at about 30 to 32 rupees EBITDA per case consistently for the last 4-5 years. So this number post cost optimization should move to what number, if you could help us understand it?
Satish, it's a very detailed question. I tell you, what has happened is we take pride in this thing that in spite of COVID in the busy season when our EBITDA is 23-24% in peak months of April May, which got affected, we could retain a major portion of our EBITDA margin with a small decline. So the efficiencies brought us to a level to catch up to that in spite of that loss. So if in those 2-3 months where 23 blended 20 for the year, 3% if has come down to less than 1% decline overall basis, meaning 2% gain in the balance of 6, 7, 8 months. So this is good recovery. Secondly, the mix also has undergone a change on month-to-month basis. For example, in the peak quarter, water was very less, glass was not there, and then in the last quarter, water has come in, and in the growth, substantial growth of 30+% came in the month of December, which is a weak month, but percentage-wise it was good. It's a combination of various things, but overall cost reduction definitely was there and helped us. And if we have to quantify which is going to be permanent in nature, a burger plant which we took a shutdown and we they started selling it from other places, and then we are shutting down 1 or 2 more plants. 20 to 30 crore net in spite of bit of freight adjustment, each plant is going to be permanent in nature, saving in the fixed overheads.
Each plant, right? So if there are 2 plants,
yeah.
So 60 crores, which means a percent or as a percentage of sales.
That's right. In 6,000, maybe 1% or half to 1% of expenses are going to be permanent in nature. That's right.
Okay. My second question is, we had partial consolidation of South in the calendar year 20, right? So I just wanted to know, had the full consolidation happened in a normal year, what would have been the extra volume that could have got added, or the other way around, how much volume on annualization basis should happen in CY21 purely on account of full consolidation of South?
The South and West was acquired in May 19. So 2020 there was a full year for all the territories. So there was nothing. It's only that we had a bad quarter, which was April, May, June, because of the lockdowns. But the complete territory was with us. There is no change in territory from 2020 to 2021.
Basically, Pritesh, you can look at slightly differently. In spite of double-digit growth, which normally we get, we ended the year with, I think, 8-10% volume degrowth. So they would not have been degrowth, they would have been growth. So that much is what is lost across by us.
Okay. Thank you very much. But sir, I'm just confused here. Was South not there for 3 months at least for this year?
No, this year, full year it was there.
Okay, so what 33.7 crore cases that we see includes the full year consolidation of all the geographies?
Yeah.
Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Hi, sir. So my question is regarding the new territory you acquired. So how is the penetration in that acquired geography? How are we doing there currently?
We are doing okay, but the real expansion what we had planned and the go-to market which we had planned, we could not do too much last year because of the pandemic. So that part we will do this year. So that's how we plan to expand the territories which we have acquired in 2019. So what work we had to do, which should have been done in 2020, is going to be done now in 2021. So we definitely expect growth and expansion of the market.
So what differently we are doing versus what the previous guys were not doing?
Well, I had said earlier also, I think our go-to market was very weak before when PepsiCo was running it, and we are strengthening that, expanding our routes, expanding the number of visi-coolers, and basically making sure our reach becomes much better than what it used to be. And we are adding a number of outlets which they were not going, and that is what is going to make our reach go much better. And of course, we are trying to make sure that our cost doesn't go up simultaneously.
Okay. The second question is regarding the margin outlook you have already discussed, but can you tell me whatever the cost saving we have done due to pandemic and all, what kind of margin we are assuming that some cost is going to be reversed? So what kind of margin is going to be for CY21 and 22?
No, as Mr. Gandhi said, that we expect about a percentage saving which we are doing by shutting down one or two plants and by making sure the efficiencies or wherever we could cut costs, we feel that will continue going forward.
So we are going to maintain the margin what we have currently?
Yes.
Definitely.
Of the normal year.
Yeah, of normal year we will maintain the margin.
Okay. What we have done in CY20?
No, 20 was not a great margin because we lost our peak season. So what our margins used to be in 19 or before, we are going to do slightly better, hopefully, by cutting some costs, which is going to be permanent in nature.
Thank you so much.
Yeah.
Thank you. The next question is from the line of Nikunj Gala from Principal Asset Management. Please go ahead.
Good evening, everyone. So my question is with respect to the freight cost. What kind of a pressure we are seeing on account of increase in the fuel cost, and are we looking at a price increase next year?
No, we are not looking for a price increase, and the freight cost with slight variance will not make any difference to us. I mean, we will manage that's why we are not saying that the cost cutting will be so high, because of some of the costs will go up, some come down. So these are all part of the business. So I don't think we have to change we are not changing any prices.
Okay.
We expect our margins to sustain.
Okay. And on RM side, apart from PET, are you what kind of inflationary pressure we are seeing that right now?
No, we are not seeing in sugar. We are not seeing any major inflation, so we are okay. And even in PET, because we were able to cover certain amount of PET prior to the season, so we will, on an average, we will not see any major issue. So our costs will not be higher.
Okay, sure, sir. Thank you. Thanks for your time, sir.
Thank you. The next question is from the line of Rakesh Roy from Insect Securities and Finance Limited. Please go ahead.
Yeah. Hi, sir. So my first question is regarding your dairy business, dairy product. But last time you said you will relaunch the product in November, January, February. Can you say about anything about this product, sir?
No, so we have relaunched our product, and the product is doing well, and we expect the product to do reasonably well, but because one year has been delayed, so we are not looking for any expansion in this for the time being.
Okay, but I am asking because last time you said because you will going to relaunch this product, so there is no relaunch type of this one.
No, we have already relaunched it, and the product is already in the market again, and which we had slowly reduced it because of the pandemic. But now we are putting it back in the market properly, and it has started to do well.
Okay, sir. So my second question, sir. Last week, 1 week earlier, recent announcement by your management is for new plant in Northeast. Can you highlight on this, especially in Arunachal Pradesh?
No, we never announced anything like that. We are looking at it, but we have not announced anything.
Yeah, so for new plant in...
The CM, we went to meet the Chief Minister for land and for looking at putting up a plant, but nothing has happened as yet. I mean, they announced it on their own, not with our consent.
Okay, sir. Okay, sir. Thank you, sir.
Thank you. Before we take the next question, a reminder to participants that you may press star and one to join the question queue. The next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yeah, sir, thanks for the follow-up opportunity. My question is on slow recovery in juices. You mentioned about the demand side aspect of it. So we have always maintained that there is a huge scope for penetration improvement, particularly for this category. So were we slow on this part as well because of the pandemic in the last year, and we may accelerate our penetration in the coming year?
No, absolutely. We have already started expanding our penetration, and what we were supposed to do last year and we couldn't do, we are doing this year. So we will expand our territories to going into the smaller villages, going into the rural, and which is where the maximum growths are coming.
Right. And any new SKU launch for juices?
No, we have just launched, we just said Mountain Dew Ice, which is a carbonated juice category, which we have recently launched about a week, 10 days back, and we expect it to be a reasonably large category.
Right. Thank you. That's it from us.
Thank you. Participants who wish to ask questions may press star and one on the touchtone telephone. That was the last question in queue. I would now like to hand the conference back to the management team for closing comments.
Thank you. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our investor relations team. Thank you once again for your interest and support and for taking the time to join us on this call. Look forward to interacting with you soon, hopefully in person. Thank you.
Thank you very much. On behalf of Varun Beverages Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.